joined by Sanjeev Asthana, the CEO at Patanjali Foods and the President of Solvent Extractors Association of India. Hi, Sanjeev. Thank you so much. Good afternoon for joining, and thank you for joining us today. First up, big announcements coming from South Korea as far as Trump and Xi meetings are concerned, and the agri-commodity that was a point of contention. First up, tell us, what are your expectations from the deal? What is likely? What are your first thoughts?
So it's a very positive announcement. I think very clearly, if US and China, as the two largest economies globally, get to work together, I think it's positive for the international trade and exceedingly positive for all the major stakeholders into the trade as they function. But coming back to the specifics, I think, if the entire sort of deal that from what we see right now, if the tariffs from 100% can go back to 40% on the Chinese exports to the US, very positive overall, both for the shipping, industry, the trade sort of stakeholders. And of course, it will have ramifications and dimensions for the rest of the world as well. So we clearly need to watch out the fine print as it plays out. And besides, the optics of the positivity, I think there's a lot for India to mull in how it positions itself in the global trade and also prepares itself for some of the major items as the subject of our conversation today, especially on the soybean oil imports into the country.
Understood. But so what about, if the substantial increase in US soybean exports to China, that'll be a result of the trade deal. How is that going to affect global soybean prices and soybean oil as well?
So we have to understand a bit of the supply-demand dynamics here. The largest exporter of beans in the world continues to be Brazil. They produce nearly 170 million tons of soybeans, and China happens to be the largest importer of beans in the world, soybeans, which is almost nearly 100 million tons a year is what they import. So the impact of Chinese demand on the global soybean prices and as a consequence on soybean meal and the soya oil prices is extremely high. So two impacts that I see immediately. A, it supports, the domestic farmers in US, which has been quite upset in the recent months because of the lack of demand what they foresaw. US, as you know, has been very supportive of the soybean the production, especially on account of the biodiesel mandates, what they gave in the country, the negotiations, what they've been doing with China to spur and support some of the, the support discussions which were going on in terms of direct cash support to the soybean farmers. But they have all the measures in the world available to them in terms of supporting it. But broadly, considering that the quality of US soybean, the capacity which country has built up over the years, and what they can do, even a marginal uptick in Chinese demand will have a significant impact on the that mood upliftment, but tightening of supply demand. So it will become very supportive to the soybean prices overall. Part of that we are seeing reflected on the Chicago Board of Trade, that we've seen over last, 1 month in anticipation of this trade deal. But more importantly, I feel that, once the ease of this tension, because the world has more soybean as of now than perhaps what the demand is going to find homes. So to that extent, it is very supportive for the US.
Right.
Very good for the international trade, but more importantly, I think in terms of the availability of oil and otherwise, I think we should see a very positive start to the soya oil season.
Understood. So that's about how it's going to benefit US and the global economy. But Sanjeev, a quick take on how this is going to impact India, since we are a significant importer of edible oils. Quick take there.
So India is definitely a beneficiary. If the trade opens up, we nearly import close to between 5 and 6 million tons of soybean oil every year. And we are very positive that the prices are friendly. If the prices get friendly, it helps the soybean farmers in the country. And we ourselves have a crop of 10 million tons, which is under harvest right now. So as you do know that the government has announced a Bhavantar scheme to support the farmers in case the prices fall below the MSP levels. And the government is already committed to do up to 2.5 million tons for the farmers in Madhya Pradesh. So we are very positive that the government support system, the oil imports potential which is there, I think should be supportive for the Indian farm sector and definitely all the farmers in the country with Bhavantar and other support. If the overall prices trajectory goes up, then government support to that extent and the resources that they deploy will also go down. So that is very supportive overall, I believe, for Indian agriculture system and the soybean prices.
All right. Thank you so much, Sanjeev, for joining us today and helping us with that perspective. Very important announcement has come today, and thank you so much for that quick take. On that note,